Welcome to DF Markets Trend Lines. Trend lines are a straightforward yet effective way to identify the trend in the market, as well as the support and resistance levels. Essentially, trend lines work by connecting either rising lows to identify a bullish trend or falling highs to identify a bearish trend. Connecting price points in this manner will quickly let you know whether the market is moving higher or lower. Similarly, if you are unable to place a trend line, the market is likely to be in a range-bound mode, letting you know to wait for a trend to develop. In this image, you can see an example of a bullish trend line. Notice how the trend line joins the rising lows to indicate that the market is moving higher. Also notice how the trend line maps the outer swings of price instead of intersecting them. Bullish trend lines should run along the bottom of the price with no price points below the trend line. Similarly, with a bearish trend line, the trend line will descend along the top of the price with no price points above the trend line. A typical way to use trend lines is to use them as support and resistance for entering trades. So, if the market is in a bullish trend, traders can use the rising trend line as a location to enter long trades. Similarly, if the market is in a bearish trend, traders can use the trend line as resistance to place bearish trades. Once a trend line has been identified by joining two price points, traders can then look to trade the next touch of the trend line. Another way to trade using trend lines is to trade trend line breaks. As trend lines are used to denote a trend, a break of a trend line is often a good indication that the trend is changing, and traders can use this as an opportunity to trade the reversal. In this example, you can see that the market is in a clear bearish trend, as denoted by the bearish trend line joining the falling lows. However, notice what happens at the highlighted region. Price breaks out above the trend line resistance, signalling a change in trend, and continues to trade higher. Break of the trend line therefore offers an opportunity to trade the change of the trend. Another way to trade a broken trend line is to trade the retest of the trend line itself. When a trend line is broken, the market will very often come back to retest the trend line before the full reversal materializes. This dynamic offers a great opportunity to enter a trade at the retest of a broken trend line. When a bearish trend line breaks, it will often act as support when tested from above. Similarly, when a bullish trend line breaks, it will often act as resistance when tested from below. In this chart, you can see that the price breaks out of the bearish trend line before reversing lower and trading back down to test the broken trend line. The broken trend line then acts as support, sending the price higher and leading to a fuller reversal of the broken downtrend.